Hi guys, I'm Tyler Lawton, Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities, and I'm here with your Cabot Weekly Review. I'm recording this just after 12 o'clock Eastern on Friday, May 27, and so far we're having a decent day today in the market. As you can see, the S&P 500 index here is up 1.77%. As far as the week has gone, all things considered, it's been a pretty constructive week. S&P 500 is up around 5.6%. NASDAQ is up around 5.7%. And the S&P 600 small cap index is up around 5.8%. Of course, we're going into a long weekend with the Memorial Day on Monday. And Fridays have been kind of rough this year. So if we can get into this weekend where the market's up, that definitely is a win for the bulls. Today I want to talk about small cap stocks. I'm going to talk a little bit about the Fed calendar because they're telling us to pay attention to the data. And then I've got some high potential stocks for you, small cap software stocks, which have been pretty beaten down lately. But if anybody out there is looking for some turnaround names, these are some names that could move quite significantly if the market starts to do a little bit better. So let's talk about small cap stocks. Well, here's a chart of the NASDAQ first. And also, actually, I threw in a chart here of the 10-year note. So interest rate on the 10-year is down to around 2.7%. Kind of interesting just to see that pullback and how it how it's inverse of the movement in some of the indices. So interesting to see that relationship play out. And then, here we go. S&P 600 small cap index. So up to around 1243 now. Back above the support areas of 1230 from late January and then again in late February. I wrote to Small Cap Confidential subscribers this week. I really wanted to see this index get back above this 1230 area and hold before we would start being less defensive. So far some progress today and it's continuing to remain pretty strong throughout the day. As you can see here, it's up near the highs right now at 1.86%. So that's progress. Still 16% off the high. So technically, small caps fell into a bear market. On May 12th, they were down 23% from the high, and they were down. The index was down over 20% earlier this week. That is better, or it's better than the NASDAQ. So small caps off 16% now, NASDAQ off 26%, the broad market off 14%. So small caps better than the NASDAQ, slightly worse than the broad market. As far as valuations go, the combination of falling prices, but interestingly, analysts have been increasing EPS estimates for the year. So small cap valuations have basically gotten crushed. As far as the estimates go, the growth estimates, analysts at the beginning of this week saw small cap earnings up 13.7% this year and then 11.4% in 2023. Those aren't bad growth rates at all. They compare pretty nicely to large cap estimates. Analysts see large cap earnings up around 10% this year and next. So pretty decent outlook there for small caps. We'll see how it holds up. Analysts might be a little bit behind the curve in terms of reining those in a little bit, but we'll just have to see how it goes. As far as the forward PE ratio for small caps, it was around 11.7 earlier this week. That is definitely very, very inexpensive as compared to recent past. You have to go back, if we forget about the COVID crash, you have to go back to around 2011, maybe 2012 to get to a similar valuation. Interestingly, small caps tend to trade at a premium to large caps, but they're trading at a significant discount right now, and they've been trading at a discount for 92 weeks. They haven't done that traded a discount for that long since early 2000s. The forward PE on the S&P 500 index is around 16.7. Again, it's 11.7 for small caps. So kind of a compelling setup here if and when the economy, we get some evidence that the economy is actually going to get through this with a soft landing, quote unquote soft landing, and not runaway inflation. But we need more data in order to have confidence in that. In terms of the data, so the Fed, again, is basically saying we need inflation to come down, and that we should all be paying attention to that. So in terms of the kind of big economic calendar items on my radar, next week we have the beginning of the quantitative tightening process. So beginning in June, the Fed is going to stop buying so many treasuries and agency debt and mortgage-backed securities. June, July, and August, they're going to refrain from buying as much, and then they're going to double the reductions starting in September. It is going to be very interesting to see the impact on interest rates. Expect to see headlines on quantitative tightening begin next week, if you haven't seen any already. Also, June 10th, we're going to get the May Consumer Price Index, so the inflation data. It's going to be very interesting to watch that. I think at this point, we all are becoming way more informed about inflation than we wanted to be. But hopefully we'll see a bit of an easing there. And then on June 14th and 15th, the FOMC meets. A 50 basis point hike is expected. Same thing coming out of the July 26th to 27 meeting. And then right after that, July 28th, we get the first estimate of Q2 GDP. Expectations are for around 1.8% growth right now. That's from GDP now. So if that were the case, we would avoid being in a recession right now. We'll have to see what happens. That GDP now estimate has come down this week to 1.8% from 2.4% a week ago. Risks of recession have definitely gone up lately. But there's so many moving parts here. It's kind of hard to look out too far with too much confidence, and that's really been the story for the year and why the market has kind of been going haywire. After that July meeting, there's no Fed meeting in August, so it's probably going to be a little bit of a pause time to sit back, look at the data, see what happens. My best guess is the market will continue to be kind of volatile through June and July as this data comes in. Again, I know I threw a lot of dates and different meeting dates at you, but that's the stuff that's on my calendar that I'm expecting to move markets. So that's what I'm looking out for. All right, let's move on to individual stocks. I know that's really what you're interested in. So I mentioned before software stocks. Software stocks have gotten creamed. Obviously, higher growth names have not done well with rising interest rates and sort of a more risk-off mentality from investors. The flip side of that is that software stocks are now trading at a discount to their 5-year trailing averages. If the inflation data can start to look a little bit better, if interest rates can kind of chill out a little bit, software stocks could definitely do very well. I'm not saying we should be going out and loading up on them right now, but if you have a little bit of risk tolerance, if you have a little bit of a longer time horizon, these are the kinds of names that you might want to consider, picking up a few shares of and tucking in your back pocket. Again, these aren't like official recommendations, just putting the information out there for you, because these are some of the names that I like and that I am following. So let's start it off here with GitLab, ticker symbol GTLB, market cap of 6.1 billion. I've talked about this one before. I think it's a platform, DevOps platform, basically for code collaboration. As you can see, the stock has been in a downtrend since it peaked at 137. But we have, if you're a technical analyst, you can see a little bit of a triple bottom here, I guess, in the 30 to 32 range. So that is encouraging. Again, it's a little early to say that this stock is, a strong buy or anything like that. But when we look at the evidence out there in the market and see some firming up in the broad market indices, this is a name that could be getting interesting. Turning now to Sprout Social, ticker symbol SPT, market cap of 2.9 billion. Here's the quick summary. So they have a platform for businesses to manage all their social media stuff. Stock took a bit of a hit earlier this week when Snap came out with their earnings. Obviously a rough reaction for Snap. And Sprout was down, 16.2% that day. So again, a rough reaction, but it never broke below 38.4, which was the low from May 12th. And over the last 2 days, including today, up around 10% each day. So just, it's kind of interesting. You step back, these stocks are so beaten up. Sprout is 64% off the high. These 10% moves almost don't even register on the chart. So again, just speaking to the potential for Sprout to get back up, let's just say it got back up into 86 range. I mean, that's a significant move from where we are now. It's a 30-point move. And, the stock at that point would not even be, close to where it was back in September at 150. So, again, it could obviously go lower as well, but clearly some high beta names here. And at the moment, there seems to be some money flowing back in. All right, moving on to Csdisco, ticker symbol LAW. Market cap of 1.56 billion. So Csdisco has a platform for legal technology. Interesting story if you go to their website and check it out. Founder-led, came public last year, midsummer. They've made a couple of small acquisitions. They're introducing some new products, kind of building out their platform. And again, kind of like GitLab, this stock is clearly in a downtrend. But lately, it has firmed up a little bit. Since earnings, they had a decent earnings reaction and kind of enjoyed a little pop, a pullback, but has been making progress to the upside over the last week and a half maybe. So that's Csdisco. Then Avalara, ticker symbol AVLR, market cap of 7.4 billion. So this is a software platform for tax automation, which is clearly a efficiency tool, and like the other ones, stock is in a downtrend, but seeing a little bit of firming up here, and some decent days, and the market has been pretty volatile over the last 2 weeks, but Avalara has managed to stay off of its lows, and if it can get back above this 50-day moving average line here, that would be another small incremental positive. And then last but not least is Sprinkler, ticker symbol CXM, another relatively new company, came public in June of last year at 16. It's a $12.80 stock right now. So they have a customer experience management platform, and some decent moves the last couple of days, and hasn't slipped below really the $10 area since, late January. So there's 5 names. Again, software going to continue to be higher beta names, should do well. If inflation data comes down, risk on appetite cranks up with investors. But if we get the opposite of that, these names are likely to still suffer. So, take that for what it's worth. That's what I'm watching. And I hope we can get out of this week with the markets up and have a nice long weekend. And we will see you all next week again. Take care.